All right, guys. What is going on? What is Gucci gang? Hmm? What is good? What is good, man? Welcome to the live stream. Who do we got? I don't know how to say that. I'm gonna just say admin. What's good, admin? One of our newer members. What's good, Tordy, Capitalist, Scott, Willow, Julius, Triumphius? I don't even know if that's a word. Maybe I learned something new today. What's good, Zen? Slowly, Mark, Tom. Finally, I'm not late. Oh yeah, it only took you until being a silver member to not be late, huh? Shit. Progress, not perfection, as they say, right? Progress, not perfection, baby. Let's go. Let's go, chat. Progress. Progress. My goodness. Oh, it's the evening? All that time throughout the day. All that time. Still late, huh? Gosh. Gosh darn. What's good, Slay? I don't even know if that's your name, but that's what it looks like. It looks like a gamer tag. Anyway, if you guys did not know, I did share this in the Discord already. We have pretty much rolled over contracts, so make sure you are looking at the right stuff. MNQM, NQM, MESM, ESM, MYMM, and YMM, all 2026. So make sure you're looking at the right one. If you are still looking at the March contract and you look at my chart for the June contract, price levels will not be the same. Okay. Drop a capital R of all letters. Drop a capital R if you guys understand rollover. Right? It's not your dog trying to do some tricks. Okay. R for rollover. What's good, Tiago? Tiago, how are you a bronze? A lot of weird stuff happening today. A lot of weird stuff happening today, chat. I can tell you that. We press on. All right. Bunch of R's in the chat. Wonderful. Look, I know the title of the stream's badass. Always. That is going to be the focus, or excuse me, the focus for this particular stream is going to be a review of yesterday. And that's why it's called what it's called. Catching moves nobody else expects. What did we talk about yesterday? Before I get into it, what did we discuss yesterday? And although I feel this was a little bit of gobbledygook, I am relatively bullish for NQ the rest of today. Relatively. It means like I think we could go higher. Am I super excited about it? Not really. If these highs were up here, I would be a lot more excited about that. But that is not the case. We have highs here, and then we have equities open high here. So this is looking like a buy model. Something just doesn't feel right about it. You know, real quick vibes analysis. Not feeling it. So, yep, you don't have to write that one down. All right, so we'll go over to yesterday. Now, remember, yesterday we were looking at the March contract, the June contract, the price levels are different, but those highs are still the same. And also, I did make a mistake yesterday. At the tail end of the stream, I gave you guys some price targets. I gave you these highs here. I gave you Friday the 13th high. And then I also gave you a high that was like way up here. I think it was 752, like 67.52 or some shit like that. And we'll talk about that here in a minute as well. But the point is, the mistake, I referenced these yesterday as equities open high or equity open highs, and that was technically wrong. So I mislabeled that. I'm not perfect. Congratulations, right? If you just found that out. They are low resistant highs, but I didn't look at the time near the end of the stream, and I didn't know. I thought that was inside 8:30 to 9. That was just after 9 o'clock. So I mislabeled that. But nonetheless, those are morning session highs, basically, because they're outside the window of... Can y'all see that? Nope. Now you can. These are outside the time window of 8:30 to 9 o'clock. So technically that high right here is equities open high, and then the highs after that. Okay? So there you go. You saw a mistake. All right? Now, yesterday, right, if you remember, I had this inversion down here, and we had a question mark in it. And as the stream went on, near the end of the stream, right, you saw me do what? I dragged it over to see if we would still respect it. And then the stream shut down. Like right about here, I think it shut down. Right? So does anybody know what else we talked about yesterday? I mean, I practically just said it all. What we discussed yesterday as potential upside? What was it? What's good, Roberto? Okay, admin, yeah. These highs that I referred to wrongly. There's another word. That's true. That's a real word. Friday the 13th high. And that high up here. So at a minimum, we got a new intra session high, a new PM session high here. We traded down. What did we trade down and into? This series of down candles. See that? So again, we had the inversion here. We had equities open, low taken. And then we had this low right here. And if you remember, we had that, I don't remember which day it was. It was a gap. We may not have that on this contract. I think that might have been this one. I can't remember. But I know if you go look at it, or at least go look at the March contract, the low end of one of those old gaps was right there. Anyway, so we have manipulation, and then manipulation again. And if you were looking at your charts yesterday, some of y'all noticed this in the Discord. Proud of you. NQ was higher at this low. See that? See that? So this is ES on the bottom. This is NQ up here. Remember, March contract. This was yesterday. This was March contract. That lower low here at 66.85.5, that was that old gap. Okay, I'm teaching you real support and resistance, folks. Real support and resistance. NQ doesn't trade below that same low. So that's how you know, hey, you know what? That's under manipulation and some level of rebalancing because it's trading at the low end of that old gap. You guys good so far? Drop a 1 if you're on board so far. Yesterday was March contract. Today we're looking at the June contract. That's still a lower low. That was still a lower low against NQ. I had that inversion before the stream even started. And we had moved that over, right? We trade beyond that and then into those down candles here. And then all of a sudden, right? How many people do you think got caught off guard yesterday with this big ass Corvette candle? How many people do you think got caught off guard at 208, right? 208 and then 209, random time window, huh? Isn't that weird? Isn't that so strange, chat? God, dog, the same time windows we keep talking about, bro. Oh, but macros don't exist. Okay. Right there. There is your time window. Well, it's not a lot of people's time window. It's my fucking time window. And some of y'all's time window. It ain't everybody's time window. But there's 150 to 210. Okay? And then 209 blast straight above those highs right there. Perfectly. Bang. See that? Right there. Boop. At 210. But macros don't exist, dog. It's all supply and demand, isn't it? Okay. I told you yesterday, dog. Y'all can believe in whatever you want. You can believe whatever you want. You can disagree with me. You can agree with me. You can be open for whatever. But this stuff is undeniable. 1250. Oh, that's weird. Let's go down in the trenches, baby. 1250. Why do we make a low right at 1250? This boggles my mind. This boggles my mind, bro. It really does. How on earth does price trade lower immediately at 1250 and then take off? Why does it do that? Why does it do that? It doesn't make any sense, dude. Unless the markets were ran by an algorithm. How else do you explain, not this turning point here, this was outside the scope of a macro, but after manipulation, why do we make a low at 1250 specifically? And then why does price absolutely scream to highs that we were looking for in a time window that we talk about all the time? Like, seriously, how else do you explain it that price keeps doing the exact same thing? There's 1250 to 110. That's a macro. Price kind of drifts. Then we get another macro. There's 150. It does trade lower into those down candles on the 5-minute and then absolutely annihilates higher. How do you explain it outside the idea that it's algorithmic? You can't. You can't. It's too perfect. It's too perfect. Look where the low was set perfectly. Look where the high was set perfectly. Not just where, but look at when. And you're telling me that an algorithm does not control these markets? That's insane. Absolutely asinine. So yeah, G, it's algorithmic price delivery. That's why it's called price delivery. It's like Amazon. It's like Amazon Prime or FedEx or UPS. They deliver packages. The algorithm delivers price. It's going to take price. It's going, okay, it's 150. Now it's going to run a script. It's going to run off its script. So it's going to go, okay, what is to the left? What is behind? Because time only moves forward, right? And it's going to reference lows, or this low, that high, and these highs. And some stuff up here as well. So it's saying what? Well, we've got efficient delivery down here. This is all horrible. I mentioned that yesterday. I said this is crazy to me, right? So it's going, okay, 150 starts. Where's the liquidity? Up there. What does it trade into first? What's that? Here's 2 o'clock. Open of the hour. Trades below its open of the hour, right? What's it trade down and into? That imbalance right there. Look at that. Look how perfect that is. Perfectly delivered inside that imbalance. Massive rally to that pool of liquidity. Price only does two things. Two things. It trades to levels of liquidity. This damn mouse every fucking day, dude. Every fucking day. It only does two things. It delivers to levels of liquidity and inefficiencies. That's it. That's it. No more, no less. Liquidity, inefficiency. And it delivers in 4 ways. And one of them is imbalance first, then pool of liquidity. That is what you want to trade. If you're not in from below the old low, or at this inversion here, or a little bit later, or the next candle on any one of those, or below the macro open, or any of that stuff. How many macros do we get? They are every hour. But the final hour has 4. You can go to my Instagram page for that. You might have to scroll a little bit. I know I've been posting a lot. Giving out free sauce, but every hour has a macro. The 850 to 910, I usually don't pay. Oh, and 910 happens to also be the high. Yeah. Holy shit. Keep proving my point. 910, and that's the high. Oh. Anyway, I'm getting sidetracked. The 850 to 910, I usually don't pay attention to. And majority of the time, that's because I'm not in front of the charts yet. But number 2, even if I was, I'm waiting for 9 o'clock to form, like for the time. That way, we then have the 8:30 low or high and the 9 o'clock low or high. And then if I'm working within that range, I'm going to pay attention to the equities open high and low, which is another point that I wanted to go over today. So I think the 950 makes a low there too. Interesting. I think the 10 o'clock macro is important. I think the 11 o'clock macro is pretty important. I think 12 o'clock is pretty important. I think 1 o'clock is important. And then 2 o'clock is also important. But after 210, you have another macro from 215 to 245. That is the only 30-minute macro that I know of. And then you have the MOC, which is 250 to 3 o'clock. And the 3 p.m. macro is all the way from 250 to 310. So you have quite a few. But I've always said this. I don't think every macro is created equally. I mean, look at it. Yeah, like that made the high, that one made the low, this one made an intra-session low and an intraday low. But obviously the 2 o'clock macro, you know, that was like the move of the day. Besides any shorts in here. That was pretty phenomenal if you shorted. This might have had some pretty good move as well. Outside of that short or this short, that was pretty much the move of the day. And that's one of the things that we were expecting yesterday. That was one of the possibilities from yesterday. We didn't really get a lot of movement on the session. And again, I didn't care for how we did some of these things. But if you follow the rules, then that's what you get. You're able to catch something like that. And a lot of people, again, didn't expect that. You go down to the 1 minute time frame. That's the time frame I was watching yesterday. It was too fun. And all of a sudden you get this nasty mega up candle. I mean, think about that. We went from, well, again, this is June, but we went from 67.59 up to 67.77 in 60 seconds. I can't do math. That's over like 15, 16 points in seconds. In seconds. When was the last time you were in a trade and you saw the market print something like that? I promise you, the first time you actually do trade something like that, you won't forget it. Or at least you won't forget the feeling of being in something like that. Because you get massively excited to be on side with a candle like that. Instead of just like this lethargicness. Or like if you were in from this and then kind of holding through this. I mean, yeah, that's still a good trade because it's going your direction, but it's printing, you know, relatively slowly, right? But then being in a trade and then watching it go bang, that's something you'll never forget. And that's something you start like demanding almost. You're like, okay, run to my TP. And you want every other trade to be like that one. Doesn't happen like that. But all I'm saying is what I was saying a second ago. Follow the rules. What are the rules? Do you remember the targets and the stop losses I gave you? It's in the free beginner series. Free beginner series. Okay? Low resistant highs. Is that a target or a stop loss? That's a target. We have a low and then a lower low. And that lower low also gets its own lower low, low end of that old gap. So with this lower low here, is that a target or is that a stop loss? A lower low like that, that's a stop loss, which means the market is less likely when we're anywhere in here, when we're anywhere within this range, anywhere in something like this, or we can even extend that to over here, okay? Anything inside this range, we are more likely to trade above those highs than we are to go to that low. That's just simple probabilities. Probabilities are shifted in the idea that we are going for highs more so than we are for the lows. And if you were really paying attention, or if you really study price, you'll know that there's a short-term low right there that also got taken. See that? Right? So that short-term low, look at where our bodies are, right? So we dip below it to trade higher. That is short-term manipulation. That can also be a stop loss if you're trading right after that. And then with this move here, right? Again, at the tail end of yesterday's stream, when we launch off of that, what does that make here now? I don't know if you guys can hear the music or not. Let me know if it's too loud, if you can hear it. That low with the lower low and then a higher low. There's your intermediate term low. See that? Then we launch, then 150, and then the move that nobody else expected. I mean, maybe some people did, maybe some people didn't. I don't know. I don't really pay attention to what other people do. But I can tell you that I put money on it, that a lot of people did not expect that up move yesterday. A lot of people did not anticipate higher pricing, much less in that time window. I didn't give you a time window yesterday, but you guys already know to look for macros. You already know that that's the final hour. If we are going to see expansion, we'll open at 2 o'clock. We'll trade lower first because we'll trade lower to go higher. We'll do exactly that. If the market is bullish, I didn't mean to do that. It was really just, I was trying to make sure everybody can see this. If the final hour is bullish, this is what we're going to do. We're going to open, right? Trade lower to go higher. Okay. There's 2 o'clock. Right there. See that? So 2 o'clock opens, trades down to go higher. That's why I made that Instagram reel. That's exactly why I said this will be the most important thing you learn in trading. The most fucking important thing you're going to learn is that right there. Okay? Probably market maker models too. That's probably the most important. But I guess as a beginner trader or intermediate term trader, this right here, I know I don't talk about its inverse very much. I'll pull up that one instead. It's the inverse. It's the same shit, just backwards. If we're going to go lower, if the market is bearish, we are going to open, trade higher first, or we may trade lower and then like later trade above the open of that hour or the session or the day or the week or the month or the year or whatever. Then we will see expansion, right? We'll see expansion lower met with retracements higher, followed by expansion lower met with a retracement higher, met with expansion lower. That's what we'll see, right? It's no different. Open, low, expansion higher. There's 2 o'clock, okay? It opened, traded lower. When it ran the high, that was a big-ass green candle. Now, obviously, it had a reversal and closed lower by 3 o'clock. But the point still remains. 2 o'clock opens, trades down to go up. And as soon as you get equal highs or low resistant highs, at a minimum is a partial. At a minimum, a break even on wherever your entry is. And you may hold for later, or you may bump your stop up, you know, to some degree. And then it in this case, it would have came down and then got you out on the rest of it, if you didn't partial above old highs or get out above old highs. See what I'm saying? Are you guys seeing the logic here? I was BE twice before that move. Yeah. We need to fix that. Okay, we need to fix that. And I still... Oh, we haven't even talked about eBay yet either. I just realized that. Okay, we got time, as long as I don't keep talking a lot. Today's drink of the day, classic grape from Olipop. Not paid sponsorship, but health is wealth, baby. Health is wealth. All right. I believe we talked about either last week or the week before. Somebody should have clipped that. I should have clipped it. But we talked about that one individual who went break even too fast. And I said it could have been a number of things, whether it be from any of the 3 pillars of trading success: the strategy, the psychology, or the money management / risk management. So I don't know what your rules are for going break even, but what I can tell you is if you keep them at the low, or if you keep them like when you have an intermediate term low and we start to rally off of that, that right here is a good stop loss placement if your entry is below an old low, or if you entered at the original inversion here or inside that inversion here. When the market does that or that and it trades outside these down candles, if your stop is down here, you can put it at your entry. Not financial advice. Or you could put it a couple ticks, or if it's Nasdaq, you could put it a couple points above your entry and then wait and see. So you're not going to be so irritated when the market trades down and it trades against you, because before that fat ass move yesterday, wherever you're in at, okay, I don't know, but let's just assume for a second that you saw the inversion, you saw it was 1250, you're like, oh shit, okay, well, I'll trade the open of 1 o'clock. Okay, cool. So you traded right at the open and you're aiming for those highs. That's a nice 1 to 3.5. Cool. Or maybe it went at the low end of the inversion, wherever. I'll get to your comment in a minute, Tom. Wherever your entry is at, okay, needed, or if it be below that old low, anywhere in here or in here, whatever the case may be. When the market does that and it trades through all these down candles and then it starts to trade lower, at that moment in time, we got 74 people. It looks like and it feels like it's going to come all the way back down to your entry. That's what it feels like. That's what it looks like, because you're going, oh shit, the market's printing down candles. What if I'm wrong? What if I take a break even, bro? What if you take a break even? At least you didn't lose money. What are you talking about? If you went break even, there's a possibility that you can get stopped out. Or if you leave your stop at the low, or maybe cut your risk in half, if you'd like to do that, that's fine. You could do that too. Then the blast and above those highs. But my point is, you don't want to rush moving your stop, okay? You don't want to rush moving your stop. But John, I've seen recordings. You've moved your stop in less than a minute. You got in on a 1 minute time frame and you moved your stop in like 20 seconds. Yeah. And I've also done that, recorded it, and then got my ass break even, and then the market went my direction. And now I'm not part of it because I moved my stop too quick. Okay. Sometimes you have to give the market room to breathe. Okay. Stop trying to go break even so fast. If your stop was at this low or that low, after this, the market never went down there. Once the market traded below all these lows here and rallied off of that, look at the rest of the day. It never went back down there. Never did that. So sometimes you have to be patient. Okay. You have to be patient to wait for the setups to form. You have to be patient to let the market pan out in your direction. All right. Now, I don't know what your situation is. Maybe you got to leave. You want to go break even and then, do something. Or maybe you're at work trying to trade and, work a job at the same time. Look, I've done it. But All I'm saying is, man, stop trying to rush your break even. He said, first time I tried white Monster, I drink it every day. Yeah. Welcome to the club, brother. Welcome to the club. We'll have to pray our kidneys don't get wrecked. That's a conversation for another time. Do you want to speak something about session high and low? What about it? What about it? Let me get through what I wanted to get through. And then we can discuss it. Because that's what this is. This is equities open. John Doe made it. I haven't updated it or anything, but what it does, it displays the highest high and the lowest low every day between 8:30 and 9 o'clock. Okay, so whatever the lowest low is and the highest high. And then it will drag that over to all the way until the close of the day. Right? So you can see that here. You see that here. You see that here. It's going to be every day. Okay? And the reason I'm telling you this I really wanted to watch Nasdaq, but it's fine. The reason I wanted to tell you this is that is one of the talking points I wanted for today. Okay? Equities open. When I talk about equities open, or equities open, equity open high, equity open low, something like that, there's 76 of you on here. Let's see if we can get the likes up, Chad. There's 76 people, 18 likes. Let's see if we can bump that a little bit. I would appreciate that. You're getting a non-paid education here. You know what I mean? That's all I ask for. Drop a like, drop a like, drop a like. What was I saying? It is equities open is the first 30 minutes. So for me, let's go to like a smaller time frame. For me, since I'm Central Time, that's going to be 8:30 to 9 o'clock, which is here. Okay? 8:30 to 9 o'clock, the first 30 minutes. It's not the first 15. It's not the first hour. It's not the first whatever the fuck people talk about. It's the first 30 minutes. Okay? The first 30. Every single day, there's going to be liquidity at the highest high and the lowest low in the first 30 minutes. Okay? Now, will it every day, will it always be useful? I don't think so. I don't think so. What would you do in a case like today? Oh, shit. I don't know. I don't know. That could be a target for later. But again, I don't think this looks all that great. But what do you notice here at 11:05? Oh, that's a weird time to make a low day too. Isn't that a weird time? That's so strange. So strange. Odd. And inconsistent, right? Anyway, 8:30 and 8:45 made the equities open low is here. Equities open high is here. So equities open low, guess what? We get a sweep at 10:30 and then we get a soup at 11:05. So that is useful information. Because if we want to long either right there or right after it to aim for those highs, that's good information to know. Now, between you and me, don't tell anybody this, but when we consolidate like that, like this, like how we are now, I don't like that. I don't like that. Because if we are bullish, just like yesterday, we should see expansion. Consolidation is fine, but consolidation for like an hour and a half, I don't know. I don't know. Doesn't feel right. But anyway, you can look at every single day. Okay? Just like yesterday. Equities open low. Now the high is at 8:55 and then that gets taken right after. So I wouldn't really do anything with that as far as like a target or anything unless It's like ES, where we have low resistant highs. Then I'm not focused on that anymore. I'm focused on the actual low resistant highs. But you can tell what? I already explained this. Equities open low got swept, and then that got souped. That's important information. Let's go back to whatever day that is, the 13th. See, like something like this wouldn't be all that useful to me because we had the high and the low set. Then we went for the low, retracement, and then the extension lower. So markets were heavily bearish. After that, like, I don't see any point in looking at either one of those anymore. Okay. This Thursday the 12th looks like actual dog shit. This is terrible. But I think you get my point. Like, if you backtest and you study enough, okay, you can see what happens here. 840 sets the high. 850 sets the low. We run up at 9 o'clock for, I think that was on Wednesday the 11th. I think that was CPI or something. Sweeps, data high, and then run straight for equities open low. See that? So that to me is useful. So every day for indices, that's at least one thing I'm looking for. Is it better to move the stop after the second expansion? Yes, I think so. But it also depends on where it goes. Taking care of these damn kids. Nice. Very nice. When looking at the entry models of a market maker model, which phase do you feel is easiest and high probability? All of it. Now, I can tell you, me personally, to teach you guys, okay, I would rather you not trade the sell side of a buy model or the buy side of a sell model. I would rather have you trade the buy side of a buy model or the sell side of a sell model. Because the more, and there's like almost 80 people, you may not, if you're new here, you may not understand, like, what is he talking about? The sell side of a buy model or whatever. It's like, what is that? No worries. This is a buy model because the markets consolidate and then distribution, redistribution, manipulation. Okay. From the low, from the equal highs or the low resistant highs or whatever, down to the low, that is the sell side of the curve. This is a sell program. The algorithm is taking price lower. Okay. That's what the algorithm's doing. It's taking price lower. Now, it is offering shorts. Remember yesterday we talked about high frequency trading algorithms? Shit that we don't have access to. But like BlackRock and JP Morgan and all of the big banks have high frequency trading algorithms, and this is what they're built around. Those retracements into an imbalance to go lower. There's a lot of high frequency trading going on. This is all on the sell side of the curve. You can trade that. After equal highs form and you want to short, you can do that. But as a beginner to intermediate trader, me personally, I would rather you wait for the low to be set and then get into the buy program on the way to the equal highs. So I'd rather you watch that or watch that and then watch that and then trade something in here or something in here in your demo accounts. I'd rather have you do something like that and trading in the direction of opposing liquidity versus trying to be Spider-Man or trying to be cute or trying to trade for social media and trying to short down to manipulation. You're allowed to do that. You can. But again, I'm just here giving you my opinion, and that's my opinion. I think you should wait for the low to be set and then play the low risk long or the mitigation or whatever in the direction of highs. That's what I think you should do. So like yesterday, if you remember, that's why I dragged out the inversion. There's really no other reference point that I have besides that low. Unless you want to learn something new. You want to learn something new today? Have I ever told you what an immediate rebalance was? Well, it's definitely not new to me, but it's not really something that I look at a lot. I really look at the ER. How do you spell immediate, Chad? Is it with an I or an E? I don't know. Is immediate with an E or an I, dude? It's got to be an I. Okay, IR then. All right, pretend I didn't ask you that. So the immediate rebalance, the IR, okay? Do you guys know what that is, or do I need to tell you? I promise you, you're going to think I'm making some shit up. You're going to be like, there's no way. There's no way. Okay, let's do that. What did I do earlier? A 1? Okay, drop a 2 in the chat if you don't know what an immediate rebalance is. I know it's members only chat today. Felix needs to know. Don't be embarrassed. It's okay. There's a lot of things I don't know. Okay? I don't know everything. Okay. Do you remember when we studied the sell side of a curve? And I told you to look at every facet. I told you to look at imbalances or up candles or whatever. And I told you to look at the entire sell side. And I told you when you have an upside target, you need to see if there's anything that will stop price and send it lower. Yes or no, chat? Yes or no? Do you remember that conversation? We've had it multiple times. So in yesterday, right, you know how we blasted up here? You know why we did that? It's not just because I told you so, or I told you we would. It ain't that, as much as I wish. Do you know why we did that? Besides the macro time? Do you know why we did that? Because nothing was standing in the way. Nothing was standing in the way. So what do I mean by that? Okay. When price trades lower here, let's look at just this right now. Okay. When price trades lower here, we trade higher, we have an imbalance here, and then we start to trade higher a little bit more, right? What would, at this particular point in time and in price, what could potentially send price lower? Well, we have an imbalance here. We have a small one here, and we have this up candle here. That could potentially send price lower. Oof. Shouldn't drink carbonated drinks on stream, chat. See, you learn something new every day. That could send price lower. This imbalance could, or this imbalance could. I don't know. I don't always know. But watch this. When that happens, okay, and price trades into that and then gets sent lower. Remember, we talked about this. This was technically a propulsion because we had this up candle that sent price lower, and then we had an up candle that formed this, right? So we had a concept off of a concept. So this was technically a propulsion here, and that sent price massively lower quickly. So guess what? This has already sent price lower. So do we have anything else that would send price lower? And the answer is no, we don't. Why would price trade into this up candle later on and send price lower? It won't, because it's going to be in a hurry to get to these highs. Why would price not stop at this imbalance? Again, same thing. It's the same thing. We didn't trade into that, but look at that. At 1050, right? There's 1045, and then 1050 sends price lower. Oh, that's fucking weird. There's that weird time again, dude. Gosh. Crazy randomness. How do these windows keep popping up? Something ain't right. Markets are broken, right? Okay. My point is this, chat. I know I talk a lot, but my point is this. Nothing in here is going to send price lower. It has no reason to. That imbalance has already been traded into. This one has already gotten traded through. So that wasn't bearish at all. And that's going to become an inversion, right? That might, but it doesn't have to. It doesn't. We get back into that inversion again. That imbalance here does send price lower. Okay, great. When we get back there a second time, it ain't going to do it again. So if it's not going to stop at this candle, there's no shirt. If it's not going to stop there, if it's not going to stop at that high, because we've already traded and had our business here, if it's not going to stop at this up candle, because we've already done that, it has absolutely zero reason to trade lower from anything. So it's going to seek liquidity. And that's what you saw that it did. Right? Hold on, John. I still don't understand what an immediate rebalance is. I know, I haven't told you. But you're looking at it right here. Okay? Now, again, I don't use this often. I do look at it. I look for it. But how can you better, let's say, have confidence that a set of highs is going to be met, or if you're bearish, a set of lows is going to be met? For the same reasons I just told you. We had an imbalance that was traded into to go lower. So we're not going to stop here. All right. We get delivery. Okay. I want you to look at this for just a minute. We have an imbalance that formed on the way lower, right? So we do have a lot of sell side delivery. Sell side delivery. And a imbalanced buy side delivery. That's what these wicks are. That's what those wicks are doing. They are offering buy side price delivery in a inefficient market. Markets only traded two things, folks. Liquidity and inefficiency. An imbalance is an inefficiency. It's one of them. Because that's what markets do. Markets are designed to be efficient. They're not always efficient. But when we get something like that, we know that price is not going to hit this and go lower to any massive degree. And then what occurs? It gets traded through. Okay? Now I know some of you may not still understand. And now I'm going to try to unlock the key for you. Or I don't know what the saying is. I'm going to try to unlock it for you. Okay? Light bulb moment. You ready for this? This right here. You see this candle right here? You see how we have a wick on the low end? We have a wick on the upper end, right? An immediate rebalance in the way that I understand it is this right here. So what I'm saying is, what would otherwise become an imbalance, right? Meaning, let's pretend for a second that this wick doesn't exist and that wick only went to about right there. You guys with me here? Don't let me lose you. I know we're at the end of the hour. We got to go over a little bit. We got to put in some overtime, baby. Imagine for a second that this up candle here only had a wick to about right there. So what would then take place is that this would be an imbalance, right? Because that's how we measure imbalances. It's going to be the middle candle, right? From the previous candle's high to the next candle's low. And that would normally be an imbalance. But what do you see instead? Well, what you see instead is instead of creating an imbalance, we don't. And price trades from that up candle down and meets it right there. That, again, from my understanding, is what an immediate rebalance is. Okay? Now watch this. This is going to knock your socks off if you do not understand or if you do not pay attention, okay? I want you to study something for a minute. I want you to study something for just a minute. I told you that markets, right, they deliver. We get buy-side delivery, we get sell-side delivery. That's what the algorithm does. It trades to inefficiencies and levels of liquidity, right? I want you to see this. This will be the last thing today. Yeah, this will be the last thing. This is an immediate rebalance, okay? After that, price really shouldn't trade to that. Now, keep in mind, where is this in relevance to this inversion? Where is that? Is this immediate rebalance? Is this in the upper half or is this in the lower half? What do you think? What do you think? I think the Sesame Street kids could probably answer that. This is in the bottom half, right? This is in the bottom half. You're welcome, Mark. Remember, every concept has an inversion and every concept has a premium and discount. So that means even inversions have premium and discount. Are you ready for this? Here's your kick in the teeth. Here is your kick in the teeth. Are you ready? Call your dentist. Make sure you're insured. Here it comes. If this was an immediate rebalance, price should not trade into that. We have efficient delivery. Where does price not go? Oh my Lord. Oh my Lord. Are you joking? Are you absolutely joking right now? No. Look at the chart. Look at the chart. Where does it not go? It doesn't go down to the immediate rebalance because it's a balanced price range. It has no reason to go there, no matter how many fucking orders are down there. It does not matter. Oh, but I had an order down here. The algorithm doesn't give a fuck about your order. Does not care. The algorithm doesn't give two shits whose orders are there. It's not going there. It's not going there. No matter what anybody's indicators say, period. Point fucking blank. It ain't going there. Immediate rebalance. Inversion. And we do get a retracement, but where does it stop and not go? It's already efficiently delivered here. It has no reason to go there, so it doesn't. And you're telling me that the markets are not fucking ran by an algorithm. That is 1250. The markets operate on a script, and that is one of them, 1250 to 110. And at 1250, where do we not go? We don't go to the immediate rebalance. Where do I put my stop, John? When can I move my stop, John? You tell me, dude. Based off everything you just learned today, you tell me. That's an immediate rebalance. I'll give you one more example because I'm trying to think of when the last one was, and I said this would be the last thing for today, and it is. The immediate rebalance. This was not something that I called out in advance. I don't think so. I don't think I gave this to you. It is crazy slowly, but watch this. We're not fucking done. Okay? This is like an OxyClean commercial. But wait, there's more. I always got more, baby. Come on. You know me. Y'all know me for too long. Okay? You see this sleeve? See how long that sleeve is? I got a lot of shit in here. I got a lot of shit all up in these sleeves, baby. Yeah. You thought you knew everything. I don't know everything either, chat. But I did not call this out. I didn't even really pay attention to it, but I looked at this the other day. You see this candle right here? Look at this. Wednesday, the 11th. I believe that was CPI. I could be wrong. But anyway, Thursday, what do? We opened higher, right? We opened higher. Watch this. You can already see it. You're not retarded. We trade down. Where do we go to? Immediate rebalance. Next day, bang. Straight up. Immediate rebalance. Next day, bang. For that high. And it went as far as, there's a candle way back here. May of last year. That was a long time ago. And there's no, what do we say? No shirt on that. Okay. Oh, you see that here too. See that? There's another one. We trade below that candle, immediate rebalance, lower, and then we just continue lower. Interesting. But anyway, that lack of wick on that candle is what we traded to on Friday the 13th last week. But anyway, my point all in all is saying that that is an immediate rebalance. And then it was bullish. You ever get tired? Do you guys ever get tired of learning this stuff? Do you just, does your jaw ever just hit the floor, dude? Does it ever do that? Look up here. Look up here for just a minute. I'm gonna have you looking at all kind of shit now. All kind of shit. There's kind of one right there, which it does come back into. But it's just something to study. Lower, immediate rebalance, lower, comes back again, stops right there, bodies, right? That's for sure supply and demand, definitely. We trade lower. Can't get past this up candle. Lower, imbalance, lower. But hopefully that gives you some insight today. Hopefully that gives you some things to look for. I don't really think we have too much going on down here. Not that I can see. Well, kind of. Like this to me, again, this looks like straight something out of a Taco Bell bathroom. But that right there, I mean, I would look at that like an immediate rebalance. But again, we spent a lot of time here. But didn't I tell you earlier, even though this looks like shit, I was mildly bullish? And we're just randomly printing higher. There's 1250. Let's look at our macro real quick. 1247, 48, 50. Look at that. 1250, lower, higher, retracement, imbalance here, launched, propulsion right there, bang, higher. Interesting. That is real interesting, I'd say. I probably wouldn't have traded this personally, but you know, this is live price, and that's what I teach with, so we'll look at it. sniping these markets so many ways with all the info. I think it's good information. Well, I wouldn't teach it to you if it wasn't. But the immediate rebalance is a really strong concept. Again, I mean, well, John, I've known you for so long. Why are you just now telling me today? It's not really something that I pay a lot of attention to. I know of it, it's kind of like, if you remember last thing, the quadrants, like you can draw quadrants on daily wicks and stuff like that. It's cool. I don't use it every day though. I can't use everything every day. I mean, yeah, Tiago, but it depends on the win rate. It also depends on your discipline too. But my win rate is anywhere from like 60 to 90%. It just depends on where you're measuring from. If it's like lower, that means I'm fucking up somewhere or probably taking too many trades. But when you actually focus and you're patient and you take high probability trades and you don't move your stop so quickly and you're waiting for like turtle soups and immediate, we don't have one here, but if you're waiting for like immediate rebalances and following the models and stuff, you should have a massively better rate than like 40%, 30-40%. That's trash. But I think also at the same time, win rate, I don't think it's as important as most people think it is. You can have a low win rate, still be a profitable trader. You can have a 50-50 win rate and still be a profitable trader. So I just wouldn't worry about it too much. Especially if a break even counts as a win or a break even counts as a loss. Like that, why would that count? You know what I mean? If you're like a 50% trader, but half of your trades or a third of your trades are break even, you're not a 50% trader. It's less than that because your break evens are counting as wins. And that's not, I wouldn't count that in my book as a win. You know what I mean? So that's why you got to be careful with analytics, because data, you can really twist and turn to make it whatever you want. So anyway, not to overload you with concepts, but it's kind of one right here. See that? Lower, immediately covers that wick right there. There's an inversion right there too, and then lower. That's kind of a immediate rebalance right there too. I'll give you one more. And this is all hindsight. I wasn't in front of the charts, 755, but you have one right here. Right there. See that? 750? Oh, that's fucking weird. 755 trades through that. And then 8 o'clock trades down and then right there. Bang. Overshoots that a little bit. No big deal. And then what does it do after that? See ya. It's a very strong concept. It's an algorithmic principle. You didn't learn that anywhere else, did you? Maybe you did. Maybe you didn't. But I don't know. Would you trust manipulation outside of a macro? Yeah. If it's a soup, if there's relative strength, yeah. Macros are important, don't get me wrong, but not every low of day or high of day is going to form in a macro. See, like our high of day for NQ is at 840, 845. That's not inside a macro. They're important, but they're not like, I don't know what to say. The Holy Grail, I guess. They're not like, not every single day is going to form a high and low inside of a macro time. But they are important. So anyway, I know it's been a long stream, but you guys got some pretty good juice, I must say. You learned what a immediate rebalance is. You learned also why price should run to highs or not, right? Like it did yesterday. Why did it do that? Because there's nothing in here that would stop price from going lower. So that's how you can trust holding the move. You know what I mean? So when you see an imbalance, right? Mostly sell side delivery. Then we get buy side delivery, right? So we had expansion lower met with expansion higher. That's a reversal. Where does price not go to? It doesn't go to the immediate rebalance. It doesn't go to fill in the bottom half of that inversion. That's bullish. Where does it go? Higher. Wow. Trading becomes easier and easier every day, don't it? Maybe, maybe not. But I can tell you reading price action for you definitely becomes easier with every live stream. All you got to do is show up. All you got to do, baby, is just show up. With an open mind, of course, and a notebook. So with that, y'all be good, be blessed, have an amazing rest of your day. I really don't know what to expect for the PM session today. I don't always like being forced to give a bias. I think upside is very weak today. Oh shit. eBay, dog. Sorry. Very, very, very last thing. Promise. No lies, no lies, no lies. eBay. eBay, baby, is up like 3% today. Wonderful. Look at that. We had a little bit of a retracement. Suspension block right there. Bang. We are up 3% on the day on eBay. Pretty cool. So with that, I'll put out a market review later today. Y'all be good. Make good decisions. And I will see you tomorrow on Wednesday the 18th for our last free live stream of the week.